Good afternoon, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina, Senior Market Strategist, and welcome to our special FOMC presentation today. It's going to be an exciting afternoon after a relatively unexciting couple of days coming into FOMC. So let's go ahead and kick it off with an edge report. And I have the E-mini S&P up on the screen right now. Let's take a look. A little bit of negativity going on here right now. We have point of control is kind of sitting nicely around 66, 61, but recently we have had a sell-off. We are trading below the initial balance, which I'm going to just wait. Man, oh man, it's going to be a long afternoon, isn't it? I'm going to round it up to 66.60. Nice sell-off here. And look at that. We tapped that JAX 1 level at 66.50 almost perfectly, but we're still kind of trading right by that S1 level. So a little bit of negativity coming into the E-mini S&P. One of the things I want you to pay attention to is a couple of targets to the downside. We have an S2 level here as part of the daily pivot study, 66.40 half. And below that, JAX 3 down at 66.25, and then a high vol level at 66.20. A little further down, that one-day min, that Menthor Q one-day min at 66.15. So there's plenty of targets on the downside. Alternatively, on the upside, you have some targets too. The top of the opening range, the initial balance rather, is right at that pivot. That's a 66.75 and 3/4. Above that, you have another pivot level at R1, which is 66.90 and 3/4. Previous session's highs, then that call resistance at that even 6600 level. Above that, blind spot 2, R2, blind spot 2 and R2 right around that 67.11, 67.12 level. So there's a lot of targets on the upside. One day max is up here as well. And why am I talking about so many levels? Well, we don't know what the reaction is going to be, right? We have the the number coming out at 2 o'clock. We all know what we think it's going to be. And then we have that press conference at 2:30, along with statements coming out as well. So 67.20 for that one-day max is also a target. So a lot of targets. Remember, we've been range bound for a few days. I'm going to squish this in a little bit more so we kind of see how the points of control have evolved over this week. We had this nice point of control on Monday. That was at 66.76. Then we kind of tweaked it down a little bit, 66.71. Then we kind of tweaked it down a little bit more to 66.61. So it's a subtle hint of a little bit of downward pressure in the E-mini S&P. Alternatively, let's look at the 30-year Treasury bonds. If I could find my they're called Christmas bonds, by the way, because we're in December. Let's go ahead and take a look at that. These are the two markets I'm going to look at for the reaction to anything that happens with respect to this press conference and this release. Right now, we have a really nice volume profile. It's picture perfect, really. This is a nice Gaussian distribution. We have that point of control right in the middle there at that 118.04 handle. Remember this morning when we were talking with Deli and Chai and with Craig Shapiro, we were tracking about 118.08. We didn't get much traction above that throughout the trading day. R2, forget about it, never even got close, 118.14. And some downward pressure, right? We are trading below, again, the initial balance, and that was at 1802, and also below that call resistance level at 1800. So now we're at 117 handle, 117.26. Downside targets, we have that pivot at 117.24. We can keep on going. We have a 0 DTE high vol level at 117.16, at 117.15. We have S1, previous session's lows, and then that one-day min, again, by Menthor Q at 117.07. Should we catch a bid here, we do have R2, that's kind of sitting there, as well as JAX 1 at 18.16. Let's take a look at that 3-day pattern here. So it's kind of the inverse of what we saw in the E-mini S&P. We have a point of control that's gradually creeping up. Remember, yields and bond prices are inversely related. We're looking at bond prices right here. So this has been inching up as we go. And I just want to point out the daily chart really quickly here. We have that long-term target up here. We're right into that area, which is now resistance, right at 118.13 in the Christmas bonds, I'll call them, the December 30-year U.S. Treasury bonds. So that's what's going on right now. We'll keep an eye on the interest rates. We'll keep an eye on the equity markets. We're also going to keep an eye on the Russell 2000 being kind of sensitive to more sensitive to what's going on here with interest rates than some of the other markets as we go through our pre-FOMC and FOMC special edition today. And that leads me, this was the Edge Report for today, and that leads me into welcoming Maggie Lake for our pre-FOMC analysis.
Jim, thanks so much. Thanks so much, Jim. Hey, everyone. Great to be with you. Here to run through some Fed scenarios for us is Julian Brigden, co-founder of MI2 Partners. Hey, Julian, how are you?
Hello, Maggie. How are you? Very good.
Uh,
Thank you very
I'm
much.
doing well. Great to see everybody who's in the chat. Looks like you guys are all teed up for this meeting. And Julian, it's kind of an interesting one. A lot of speculation and questions swirling around this. How are you? I know your clients have been asking you about it. There's been a lot of conversation. How are you feeling? Does it feel like this is going to be a really important one, or is there maybe too much hype going into this?
I think expectations are high, Maggie. Let's put it like that. I think I would say particularly in the equity market and to some degree in the currency market, I think expectations are high. I think less so in the bond market. The only place that I would vehemently sort of disagree, or well, not vehemently disagree, is the number of rate cuts that we get priced in before Jay Powell is replaced. Right? I think when you look at that and you sort of say, are we really going to get possibly four rate cuts, 3 to 4 rate cuts? I can see three. I'm not sure I see four. But I think what's going to happen, Maggie, is I expect the Fed to be the Fed, the traditional Fed that we understand. So quite a balanced view of the world. Maybe that comes as a slight disappointment to people. I think the second reaction is going to be key. And by that, I mean, do we get disappointment trades and potentially big disappointment trades? Or do we get slight disappointment trades and then the market says, because I know that once we get into the beginning of next year, we're going to have a much more administration friendly FOMC, and they're going to push those rate cuts through anyway. So it's that secondary price effect that I think will be more telling, Maggie.
So you don't think that there is any chance that we get a 50 today? I mean,
No,
it doesn't seem consensus, but you don't think there's an outside chance.
no,
How come?
no, no. I mean, maybe, look, everything's possible, right? But it's a no.
Do you think this is more because of the politics around the Fed, or do you think the Fed is worried about a sort of negative reaction in the bond market? Because we
No,
didn't
I think
expect that big one the last time they were easing. They sort of were preemptively getting in front of it, and then we saw yields actually go up.
correct,
Is
correct.
it politics or the market that the Fed is more concerned about
I
right
think it's
now?
the data, actually, Maggie. I really, truly think that if you listen to what the Fed says, and I've got lots of friends who do this for a living, right, who talk to them and parse everything that they say. And I think, yes, they're concerned by the lack of hiring going on in the economy. We're not seeing any firing. This is something that Jay Powell brought up in the last press conference. Um, but they don't necessarily see the lack of hiring, or should we say the slowdown in the headline employment rate, as I think it's probably a little lower than they'd want, but they do think immigration is playing a big part of that, that we've seen a large proportion of the workforce essentially move out of the workforce, the immigrant workers, and that does weigh on that headline non-farm payroll rate. We're not really seeing much of an increase in unemployment. And if the administration delivers some of the things that are expected next year, we get the big pickup in capex from the big, beautiful bill. We get some sizable refund checks for people, and things get better. We still have super low unemployment, Maggie, right? We've not really ever managed to expand from this level of unemployment historically without seeing inflation come back. And we already have very sticky core inflation. I know that everyone likes to say it's defeated, it's done, right? But the reality is when you look at core service inflation, which makes up about 75% of core CPI, it is sitting at some of the highest levels we've seen in 30 years. And the last time we were going up at these levels was the mid 80s, and the Fed was absolutely ramping up rates. So I think they will look, as they look at the data, things are, yes, you could do a couple of precautionary rate cuts here, like they did last year. But it's entirely possible for at least this Fed would not be delivering what is currently priced into markets. Now, as I said, we may not have this Fed. We may have nothing that even remotely looks like this Fed by the time Jay Powell leaves in May. And at that point, we'll see where rates go.
Interesting. So if that's the case, why do you think the bond market, why are bond yields, U.S. bond yields, been moving lower? If the Fed is, maybe they're going to cut rates, but they're kind of just doing it to probably get Trump off their back, and really they're still walking a fine line with a tight labor market and inflation that could be a problem. Why aren't bond yields higher? Wouldn't they be concerned the Fed is moving, sort of too fast? And wouldn't they be putting pressure on the Fed to stay higher? What are they sniffing out?
So I think there's a couple of things. So I think there was some positioning, which, I think people were quite short the long end. So we saw a bit of a squeeze, that steepener trade, where you're sort of, looking for the curve to pivot and move steeper was quite a popular trade. So I think there's been some of that. I think there's been a slight rethink in terms of the fiscal deficit, in terms of the money that's coming in from the tariffs. I mean, it is money that comes in to the Treasury, right? I mean, it may not be officially allocated. The CBO, the Congressional Budget Office, doesn't officially allocate it, but there's money there that could be used for that. I think some of this is because we have seen slower data, and I think the market's got very fixated by this slower data, this narrative around weak employment. But when I said, I look at the labor market and it's really not that weak. It's finely balanced, but that's not necessarily the same thing. So I think there's been a slight, I think that combination of factors, Maggie, is what's really been driving a move. I mean, at 4%, the 10-year yield, my inclination is to kind of fade this at these levels, frankly.
So you think the bond market's mispricing the Fed?
I mean, I think, look, I think it's entirely possible. Look, 4% seems like, absent a recession, seems like a pretty decent, we've had a solid rally, right? We've come all the way back from 5. I think it's towards the bottom of the range, of a range that probably is 4 to 5, absent, let's say, more government manipulation, which I don't discount either next year, Maggie, right?
We one of the reasons that there's so much attention on this, and I know that people are blowing your phone up, because we have Stephen Miran, brand new governor, confirmed on Monday, weighing in on this meeting. Do you think he's going to have an impact? How much of an impact? How are you even handicapping that?
Well,
sort
I think
of unprecedented.
Yeah, it is. It is. It's certainly unprecedented to have a serving member of the cabinet, or basically, or the presidential team to be on the board. Will he sway the debate? No. I mean, they go round the room. There's sort of 19 of them. They all discuss. They all give their views. They all give their economic thing. I mean, look, he will sway it in the sense that he will dissent, right? Almost certainly. So I think we'll get a dovish dissenter and a hawkish dissenter. And in that sense, yes, that's going to be important. But the most important one, realistically, is Lisa Cook, whether we replace Governor Cook. That seems less likely than it was a few weeks ago, but still the administration is not letting up that pressure there. And then the big thing that not that many people are focused on, but they need to be focused on, is the re-election of the regional governors, who you get 5 voting regional governors on the FOMC, and they are automatically pretty much rolled over every 5 years. It's all at the same time. It all happens in February. And the question is whether the Trump administration can apply pressure on the regional boards of governors, who then in turn select those candidates, right? So can they, through the back door, get control of the FOMC?
I mean, does is this just foregone conclusion that we are going to have a more politicized Fed now, or we're going to have a Fed that the White House has more control over. There was a time when the mere mention of that, and it wasn't so many months ago, created outcry that would create huge turmoil in markets if you threaten the Fed's independence. But it's been circulating for so long. It seems like people, Stephen Mirren's on the board. Okay, he's voting. He's the Trump administration has more people falling in line. They're talking about radically reforming the way the Fed operates altogether. Forget about switching out the personnel. Does it matter to the market anymore?
Oh, I think it does. Look, I mean, I think the job of the market is to digest the information and move prices accordingly. It shouldn't be a judgment on whether it's right or wrong, Maggie, right? And I think there are times when essentially, because what we are talking about is essentially fiscal dominance. So in other words, the role of the central bank then shifts from, targeting employment and inflation to really, let's call it the solvency of their boss, as one of my friends likes to term it. And so managing the stability of the debt effectively of the government so that it is manageable. But you are seeing profound market moves. I mean, I think this is behind a lot of the strength in gold. I think this is where we've seen this recent run up in silver, where we've seen, this acute weakness in the dollar since the start of the year. I think a lot of those factors are beginning to weigh on markets, right? We may look at the S&P and go, oh, this is fine. But I hate to say it to the people, I think that an awful lot of the strength of the S&P is what I will call money illusion. So in other words, it's up in dollars because the dollar is down. It's not up in euros. I mean, the S&P in euros is still down for the year and quite materially down for the year, right? So I think this politicization of the Fed, it's not a given, Maggie, right? It's not a given because they don't have yet full control. But if it does happen, and I'm not saying it's wrong because we do have a debt problem. We may need to go into fiscal dominance. We have seen that, certainly in the Second World War, we saw it as a way of managing and reducing the pressure on the government. We saw it to a certain extent during the Vietnam War. It's not a wrong thing, but it is a radical change from where we have been most recently.
Yeah. I love a coconut drink in the chat, Alfonso. I'm loving this vibe. Would love to know how folks are positioned going into this, because when we look at equities, if you are making an equity bet on this, Julian, do you feel, I've seen a lot of headlines that said equity market at all-time highs. What could possibly go wrong? And there is this feeling that we're due for some sort of correction. Are we looking for an excuse for one in anything coming out of the Fed today? Or do you think this is just run it hot, don't fight this rally? All of this liquidity is going to end up in assets and you just can't fight the tape.
So I think, look, short term, I think it's entirely possible, Maggie, right? I mean, I'm not sure we get a massive move in the equity market ahead of triple witching. I mean, we got the dealers look like they've got quite a lot of positive gamma. I kind of think that gets controlled, but, people are definitely long risk, right? I'm looking at some of my own positions and I'm thinking, I'm definitely pushing my luck here a little bit. I know I am, right? I've got some currency positions on. I've got some silver junior miners, and I looked at those today. SILJ, it's really high octane, like dollar trade, and it's sitting at basically decade highs. Is it pushing its luck? Yeah, So look, I think I wouldn't be surprised to get some pullbacks. Do I think that it really undermines the momentum in the market? I don't think so. But my view is very much that the momentum is really now away from the S&P. It's more into individual stocks or individual sectors. I think the sort of my personal view is the AI trade is kind of peaking or losing some momentum. I think that weighs a little bit on the S&P. I just think there are better places to be invested than in the Mag 7. And I think that has a lot to do with the dollar. And if the dollar breaks, I mean, the one chart that I've been looking at, and I know I should have probably said I'd share a screen, but this one I think has made the rounds today. But it's been on my radar for weeks and well months. If you do a chart of the dollar index and you take it back to sort of 2009, you can see that we've been in this massive, great big channel off the lows of 2011, and we are sitting on a monthly basis, Maggie, right there now. Some of the currencies have already broken. The Swedish krona has arguably broken the equivalent trend line to the dollar stocky to the downside, so the dollar getting weaker. So I think, the setup to me is, that's why I said I'd be intrigued to see, the dollar bounces back a little bit because they're not quite as dovey as people would like. But then do you just see this wave of, I don't care, bam, and sell dollars? Because then I think that will kick gold off again. That will kick some of these gold and silver mining trades off again. That could kick off some of these commodity trades. And it's not overly positive for the US historically on a performance basis when you have a weak dollar. The US equity markets generally underperform the rest of the world.
There was another chart, by the way, miners and junior miners, different categories, right?
Yes.
Junior miners, a lot riskier. Watch what you're doing if you're playing in
As I
that.
said, it's the real high octane trade here, Maggie.
You're a brave man, Julian, but they have been doing really well. But I just want to make that distinction. I know you will all probably know that already.
100% since the start of the year. It's
ride it up and ride it to the right, right?
Yep.
You're gonna do that for a little bit longer. I know you put out trade alerts with your weekly macro capture.
Yep.
You've been really bullish gold. Are you taking any money off the table or recommending sort of taking a breather here at all with gold, or is this just another one that's just the momentum is too relentless to not continue to be bullish there?
We've written some short-term options. We recommended to our clients to buy another tranche. Recently, we've been long for, as you said, for quite some time and managing that process all the way up. And GDX, we've had a very, very good run on as well. But we recently, as we moved up here, recommended to people to sort of start thinking about writing some calls against some of these things, just to dampen, I think, a little bit of that potential underlying volatility. But I do think the trend looks extremely solid, Maggie. But look, we have to be cognizant that this is an asset now that is owned, right? So if you were to get a risk-off event, a broad risk-off event, it would arguably come down to not as much, I don't think, as say the S&P, but it would come down to.
Yeah, everybody sells their winners if they get stuck with margin calls. Builders, bank stocks. Some people are looking at the prospect for lower rates. We have mortgage rates at a 3-year low here in the U.S. on the back of the recent drop in yields. Any interest in that? I know you're not. I don't think you like the U.S. as much as other opportunities in the rest of the world, but.
Funny you bring up the builders. So I've been looking at that builders chart. I look at home builders because actually home building is a very big part of the US economy. And I actually think I use the S5 Home, which is basic. I think it's ITB. But it's the GIC, and you get the proper market index as opposed to the ETF. And we've seen this incredible run up in these stocks since April. If I look at as I said, the S5 Home, it was like 2,200, and we've run all the way up to 3,300. And this has been a sector which in the last few years has had a crazy run up. I mean, back in 2020, these things were $500, and at one point we hit $3,600 on the home builders index. I have to say that when I look at this chart, and you obviously know it's back from the Real Vision days, this this run up since April looks like a big bull trap to me. So if you take that back and you look at it on a weekly basis, and I don't know if anyone can, you can throw up ITB, you could show the same thing. Unless we can get back up above recent highs, that I find that level to be quite, that price movement to be quite concerning. It looks like, as I said, a classic bubble where you've had this parabolic run up, you make this sort of blow off high, you then have this deep correction, you try and make it back to those highs, Maggie, and you fail. And that I actually quite find a little concerning. And I'm not saying that I think rates are coming down, but I think there are some things that the administration are envisaging doing where they want to try and unlock the housing market. And I'm not sure that they're necessarily beneficial for the home builders. I think if you ended up unlocking the existing home market by suppressing mortgage rates somehow, I think that actually would create a lot more competition for the home builders, and they might find that they're competing in a much more fluid marketplace and their pricing might disappear and their margins might disappear. So I think they've done very well because they've really been the only game in town because they've been the only supply.
I think this is why we say this is an important macro moment, because the government decisions have such a big impact potentially on markets right now in a way that we really haven't seen. It was kind of all monetary policy and interest rates, but now these decisions and who they're really meant to benefit. This is we tend to think of the administration as super market friendly, but we're wondering, it's worth pulling out those threads to see whether that's true. I wanted to end on one thing as we are almost done with our part of the conversation, because we're getting pretty close to when we're going to get to the decision. You always we always joke, and you kid when we speak about having chart porn that you love. And you talked about one last time that we were speaking. I don't know if I'm going to remember it, but it was something like tech versus either gold or miners. Do you remember that one we talked about? And that was one of the ones that you were really keen on, and I thought it would be fun to share.
Yeah, I posted one on X the other day where I did the Russell against silver, but there was lots of ones where
talk to us about that, because this was for Anthony. Anthony's I know been watching the Russell and small caps and thinking about that.
So look, I think this goes back to this dollar story, right? The dollar, I'm not saying that the Russell won't perform. I think it should perform. But the question is does it outperform a tangible asset like silver in a weak dollar environment? And the answer is historically no, it massively underperforms. And the one that you're actually referring to is when you look at a logged chart of the XME, so the mining and metals ETF, divided by the XLK, which is the tech ETF. And back in 2008, the ratio was over 4. At the 2020 lows, the ratio was 0.2, Maggie, 0.2, right? And currently it's 0.32, and we've broken a trend line that goes back to 2011. And to me, this is the sign of the beginning of, I'm very much in the camp that we are in a cycle down in the dollar. It's not the end of the dollar as a reserve or anything like that. It's just a cycle, and we've had these many times during history. And if this repeats, I think this ratio is a 10-bagger.
10-bagger. We like the sound of that. I'm sure people are going to get their charts out and pull it up and see if they agree with you. Julian, always fantastic stuff. You can find Julian on X at Julian MI2 Partners and his work at MI2 Partners. Always super fun to catch up with you, Julian. Appreciate you.
Thank you, Maggie. My pleasure.
Awesome stuff. Okay, as I mentioned, we are getting pretty close to that Fed decision. Let's bring back in our panel, Jim Cagnina, Craig Shapiro, and Tracy Shuchart join us now. Super interesting conversation. How are you guys feeling ahead of the meeting? And Jim, what are you seeing happening in the markets?
Well, not much. A little bit of anticipation. The equity markets are kind of settling back to the what I'm calling the point of control, kind of the neutral area right here where we started the day. So, no breakouts, no trends yet, which is not unexpected, right? We're going to see that shortly, I think. Same with bonds. Bonds are kind of reacting a little bit more negatively, and I think the bond market's a little smarter than some of the other markets. At least it kind of reacts ahead of time, anticipates better. And so we are seeing a little bit of a downward move here, but not a big range. Nothing unusual is really happening yet. So we're going to just hang tight and see what happens when we get a little bit more information.
Yeah, Tracy, I know you're going to be looking out for that. Craig, nothing happening also can mean coiled spring in the markets. It's going to be a tough one because people are not only trying to look for the language and those keywords and the kind of Fed speak we're all used to, but now there's this kind of political intrigue embroiled in this as well.
Yeah,
I mean,
the
I'm
two
sorry,
things
go
I'll
ahead,
be,
Craig.
sorry there. Yeah, no, the two things I'll be looking at are the dots first, right? What are the expectations for the 2025 dot and the 2026 dot? The market is pricing in an incredibly dovish outcome. And so I think it's going to be hard for the Fed dots to actually deliver on that. So we'll see. That'll be something, comes out right at 2:00. And then, to your point on dissents, last time we had two dissents from Bowman and from Waller. Now we have Steve Myron in, who's most likely to dissent if we're only going to have a 25 basis point cut. So the potential for three dissents is there on the dovish side. And then on the hawkish side, you have more hawkish members like Musalem and like Schmid, who may be looking for no cut this meeting. So wide range of potential there. So we'll have to keep an eye on whether or not there's dissent on the hawkish or dovish side.
Yeah,
Yeah,
Tracy,
and I think you have to look at. Yeah, I think you have to look at, so for 2025, the median is currently 50 basis point cuts. The market is pricing in 3 cuts. And the math, you would have to have 8 members move lower to get 3 cuts this year. So that kind of seems like a tall order right now. We'll find out soon. But the math doesn't really work on that very well. So we'll see if the Fed can, or the Fed can outdove the market or not.
Yeah, it's going to be an interesting one. I don't know. Jim, you mentioned that the bonds are a bit smarter. Does it feel like there's any kind of positioning in the lead up to here that might be out over its skis a little bit? It seems like everyone's going to be in wait and see mode the whole week, so maybe not anybody taking any oversized bets, but have you noticed anything?
I don't know. I mean, I'm just going to pull up a daily chart to kind of suggest something. I mean, we were really hitting kind of a area resistance. I'm sorry, let me get the bond chart up here. I got to find it on my left-hand side of my screen. We were really hitting this kind of area of resistance, I'm going to call it. And we were at 115 handle. We couldn't get over that for a long period of time. And then it happens so often the week before Fed meeting where it actually kind of ramps up or ramps down, depending on its opinion. So I don't think it's over its skis right now. I think it's anticipatory. I think it senses that some of this pressure that the FOMC is under now and will continue to be under going forward here is going to result in some dovish activity. And that's what I think the bond market's telling us right now.
Yeah. We might be in this interesting period too, where and Tracy, I'm going to toss it over to you because we're getting really close to that as well, and so feel free to break in and just jump on if you've got the news. But it's going to be really hard to gauge real market reaction until we get the press conference. I think like people are going to be reacting to all of the data and the dot plot, which we're going to get to in a moment. But then we also need to see as Jerome Powell starts to speak, how he postures and what he says about the future, his tone. I mean, this is one time where like the sort of intonation may actually matter. The body language may matter. The words he chooses may matter.
100% I agree with that. And it's going to be the questions from the press, obviously. Hopefully, I know they screen them and they're not allowed to ask too hard of questions, but, sometimes you do get somebody in there to throw a curveball. So I think that'll be more interesting than his actual statement as well. and we'll see how many times he clears his throat. So quarter point cut, exactly what was expected.
Okay, there we go.
25
Trying to
basis
find
points.
middle ground. I think if that's the case, Tracy, and I know you're looking into the details. If that's the case, then it puts even more pressure on the press conference, right, Craig? Because now we're really looking for what else comes out of this and any hints on the conversation that took place, because they're obviously trying to sort of walk the middle line.
Yeah, and just reading kind of some more headlines here, but it looks like Marin was the one who dissented, looking for a half-point cut, but the median projection is still for 50 basis points more of cuts for the rest of this year. Fed says downside risks to employment have risen. So look, the initial reaction, I think, is constructive, right? We'll see how the markets take this. We know that systematic flows are in, and folks are very long this tape as of right now. So Powell will have to deliver that consistent dovish message that the Fed sees an economy that is slowing, sees concerns about the labor market deteriorating, and is going to be there to address that with more accommodation. If that's the message that we get, which is a Fed that is not too late, that a Fed is right on time and is going to deliver, I think that's something that the market will be very happy with. If we come across with a message that is, yes, the economy is slowing, but the Fed still needs to be concerned about sticky inflation, I think that's a message that's a little bit more concerning.
Yeah, I'm just looking at the statement changes. They really all pertains to the labor market. So the first paragraph now reads, recent indicators suggest that the growth of economic activity moderated in the first half of the year. Job gains have slowed and the unemployment rate has edged up but remains low. Inflation has moved up and remains somewhat elevated. And so before this read, labor market conditions remain solid. So this was all about the unemployment rate. And so I think they're telling us what Powell has said and was saying at the last FOMC during the presser and at Jackson Hole is that he was more concerned about the labor market than anything else. And I think this reflects exactly that, the wording in this document, in this statement.
Jim, anything notable happening in markets that we should be aware of?
Not really. I mean, we're really, the rubber's going to hit the road in about a half an hour. Right now we're really kind of the conversation's really defined between gamma level 1 at 66.50 and gamma level 2 at 66.75 for the E-mini S&P. We are trying to poke a little bit higher right now, but we always have this initial reaction, regardless whether it's FOMC or CPI or anything like that. So we need to give a little bit of time here. The bonds, same thing. We're kind of still just a little bit above the initial balance, right in the kind of the meat of the value area right now. Not a lot of movement. We are back to a 118 handle, but I think we got to wait. Equities are trying to move higher though right now, so we'll see if that sustains itself.
Tracy, were you jumping in with something?
No, sorry.
Okay, no worries. I just wanted to relay, and this can be, both Tracy or Craig, if you want to jump in on this. I just want to relay something that Rogan was talking about. And to your point, Jim, I think this is really going to be all about the press conference. And I don't know if I said this in my head or out loud, but I think we can all agree the toughest job today is Jerome Powell's. It's hard to imagine how he comes out winning from this. He has such a tough road to sort of try to, address the White House, the markets, fellow Fed members, Congress and the American public all at the same time. But Rogan in the chat bringing up a really interesting point. If the market's expecting 3 cuts, at what point does the Fed signaling more create more fear than jubilation? Is that a concern? We used to talk about this all the time. If the Fed suddenly gets super aggressive, there's that moment and the market's been kind of in this mindset where bad news is good news and yay, we're going to get rate cuts. We're getting that Fed pivot. This is going to fuel asset markets. But, we've always wondered if that's the case. What does the Fed know that we don't? And that's sort of an interesting conversation. Is there anything in the press conference that they might say if in a nod to the Stephen Miron of the White House that can actually cause more concern than jubilation?
I think it's interesting here. What we have is we have a Fed, delivering a 25 basis point cut, but taking really more of a slow path back down to neutral, right? So the market is pricing in a more aggressive easing cycle with expectations of, rates getting below neutral, in the fourth quarter of 2026. But based on the reading of the dot plot right now, you still have the median dot at 3.4% for 2026. It's 10 are there and 9 are below. So we're right on the line between 3.4 and 3.1%, but the market is down below it at 2.9%. So we already have a situation where the market is expecting a Fed to be much more accommodative than really it's willing to. So I don't know. We have this kind of slow path back down to neutral here. So maybe the Fed is saying, we see some of that deterioration in the labor market, but we're really not overly concerned about it. The market obviously always wants, more easing, but I'm not sure we have that message yet from the dot plot. Clearly, Powell can kind of signal in 25 minutes the direction that where his dot really is, but it doesn't really seem yet that the Fed is willing to give that that rapid pace of accommodation that the market expects.
Yeah, I would agree. I mean, this looks on the outset rather hawkish, to be honest. I mean, you only had one dissenter this time, so we definitely didn't get the 8 to get 3 cuts this year.
Yeah, is that a surprise, Jim? I'm a little bit surprised. Maybe even the market isn't moving a little bit more on that, because I think we thought we might get 3 dissents. People who have spoken in favor of being a little bit more aggressive. Is that maybe a surprise in and of itself?
Yeah, we could have had 5, right? We could have had 2 hawkish and 3 dovish dissenters. 5 out of 12. That's a pretty high percent. But I'm kind of looking at the Russell 2000 though right now. This is a small cap. Hopefully Delhi's still long. It's trying to raise its hand. It's saying, "Hey, look at me. I'm up to R3 right now." It's breaking out to the upside. So it's this market in particular, the small caps probably a little bit more sensitive to the interest rate conversation. Is kind of liking what it's hearing so far. It's kind of trying to make a run for some highs. We're not to the all-time highs yet, but Cooper had a good call on that one. Thank you, Cooper, in the chat.
Yeah. And Anthony says, of course, I'm flat. So Tracy, really interesting that you pointed out the labor market. We have the market, investors have been so keyed on inflation, right? For as long back as we can remember now, right. That's been the indicator that everyone's looked at when we're trying to figure out what the Fed's going to do. That's what's been moving the bond market. Are we in a situation now where we need to look a lot more closely at labor market data?
Well, yeah, I mean, I think we're going to have to. And really, I go back to the last FOMC presser, and all Powell talked about was the labor market. And I don't think a lot of people picked up on that, because when he mentioned it again at Jackson Hole, people seemed to be surprised. But during that whole presser, he was focused on the labor market. Now, I don't know if he knew the revisions before they were published or what was going on back then. But of course, now, it is all about the labor market. Not only have we had downward revisions for numbers earlier this summer, but we've come in, soft on the last report. And then we just had, a 911,000 revision from 24 to 25. And now people are saying, well, this is not what we thought that it was. The labor market's not as strong as we thought it was.
Yeah, I'm going to say that we heard Julian before talk about the unemployment rate. The labor market looks pretty good. Some stuff going on structurally with immigration, but all in all, it's pretty balanced. And I saw all over X this morning people kind of describing the labor market as that. But there are some people that are getting more concerned and think the Fed behind closed doors is a lot more concerned about the labor market. I just did an interview with Juliette de Klerk in the Market House, and she thinks there's some real cratering going on in the labor market, and a lot of the impact from AI is accelerated, and people are we're kind of going off a cliff, and people are not really paying attention to that. Super interesting sort of data she has to back that up, but it's an interesting concept. And if that's the case, you could see the Fed get more aggressive. Right now, they're signaling this slow and steady approach, but it doesn't look like the market is priced at all, Craig, for something that could turn more quickly. The Fed says it's data dependent, there is a possibility that they could start to accelerate this, I suppose. Does it look in any way? And Jim, jump in here too, that the market's pricing anything close to that?
Yeah, it definitely seems like the market is more concerned about the pace of labor market deterioration than the Fed is, and whether or not that's just this anecdotal stuff in the real economy, the low end consumer being squeezed, and small cap companies being squeezed by high financing costs, or if it's the AI effect, it's the forward looking indicators of hiring are starting to come down because companies are saying, why am I looking to hire people when this technology, productivity enhancing technology is out there? It may make more sense for us to go in that direction. So I think as time goes on, we're going to see, more pressure on the labor market and on the hiring market because of AI. I think the question then becomes, does Fed cutting actually do anything, right? Does a 25 basis point, 50 basis point, or even 100 basis points of cuts, is that going to change the mindset for some of these companies who are secularly thinking about replacing labor with machines? And so, that's probably not a trade for today, but just the efficacy of Fed rate cuts and whether or not it has the same type of stimulus behind it like it used to, I think is something that's we'll have to think about over the course of the coming weeks and months.
Yeah. And again, this is why we're talking about macro. If you're going to try to position, even if you're doing it into the Q4 of this year, I mean, these are things you should at least have in the back of your head. Tracy?
Yeah, I mean, I think that the labor market right now is also being affected by these tariffs. I mean, really, they didn't come into effect until August 1st. And small business are kind of like, we don't exactly know how this is going to affect our bottom line. They're not Walmart, right? They can't soak up some of that. And so they've kind of right now been on, we're not firing anybody, but we're not hiring anybody, right? And so that's also put a lot of pressure, I think, on the employment numbers, on the new employment numbers.
Yeah, Jim, we haven't looked at currencies at all. Julian kind of gave us that setup where he thought the dollar could make an attempt at a rally and then fail at being a really big bull trap. Again, I know just a reminder, everybody, obviously Powell's talking at 2:30, so we're kind of in a wait and see mode since we didn't get that much of a surprise on the actual statement. But anything notable happening in the currency markets we should be aware of?
Yeah, Maggie, you're reading my mind. I'm looking at a Euro FX versus the U.S. dollar chart, and the Euro is trying to rally, hit R1, hit JAX3, giving a little bit back, but the dollar's looking weaker across the board, across all the major currency pairs now. It's looking a little weaker. Might be good news for the U.S. exporters, but the dollar is weaker so far on the news. We'll see if it continues. The Euro is pretty strong.
Yeah,
the dollar's down about 0.25%.
Yeah, and gold too. I know we've been talking about the momentum in that market. Looks like it's easing back a little bit, but no one really looking like they want to take any big bets ahead of anything we're hearing. If we get through, I think everyone's hoping that we get something out of the press conference to go on. If we don't, Tracy and Craig, where do we turn to? Craig, what do we look at next? If this doesn't give us anything to move on, what is the next market mover that's out there on the horizon?
Yeah. Look, I mean, I think we still reserve the right to believe that the numbers we just got are going to matter, right? We're only 13, 15 minutes in, but look, I think what the Fed has delivered today is not necessarily a dovish construct, right? I mean, they had the opportunity here to move to where the market was with respect to the pace of easing that is being priced in. And really, about half the Fed really just is not there. We pointed out earlier, we had two dissents last time from Waller and Bowman, and neither of them dissented this time, right? Just Moran dissented, which is clearly expected. And so, you have that dynamic in play. You have the median dot for 2026 at 3.4%, which is 50, 60 basis points away from where the market was for December 26. So that's a hawkish message versus expectations, right? That is a Fed that is not yet willing to deliver what the market wants. Now, as the data, if the data deteriorates in the labor market and consumption, sure, the Fed is ultimately would get to that point, but we're a little bit we've front run a lot of that so far. And so the question I have is, with equities having done what they've done and systematic flows being as long as they are, a little bit of check back there that takes volatility up, could accelerate, could exacerbate here. So, and then with respect to Powell, look, I think he's obviously not going to be in the camp of immediate easing and big cuts. He's going to be more in the steady as you go camp, and the data will matter. And so I don't suspect he's going to come across as overly dovish in this press conference. He's probably just try to toe the line, and from there we go into zero data expiry week positioning, gamma levels, stuff that Jim knows, as good as anybody. And so, we may wind up backfilling the narrative, right? If we fall from here, it'll be because Powell was very hawkish. If we go up from here, it was enough, right? But ultimately, some of the internal stuff that's going on with these systematic flows and positioning, really could dictate how things go between now and the end of the day through the end of the week.
Yeah, great point. And often that is the case. I'm told for everybody who's in the, so much of this is about really those institutional flows, and we tend to address an assigned narrative on it. Tracy, I'm just looking, if I'm not mistaken, I think one of the most interesting things, and we are likely not to get any answer indication from the press conference, maybe the minutes when they're finally released with a delay, is why we didn't see a dissent from Waller and Bauman. They dissented last time. I feel like because of that, everyone had really pegged them for being super dovish and in favor of something much more aggressive. All they needed was a 25 basis point cut, and they're happy to jump into consensus, leaving Mirren alone. That seems like a really interesting dynamic, especially if some of them were vying for Jay Powell's job.
Right. I was about to say Waller may just have signed himself out of that position on this vote. But we will have to find out. But what's interesting is, we had the initial reaction was higher in the equity markets. Now they're coming back down. You have the S&P back negative. You have Russell giving up all of its gains. But interestingly, if we look at the CME Fed Watch tool, believe it or not, the market is now pricing in a 97% chance of a cut in in October, 93% chance. That's up from a 74% chance before the decision. And then you also have December also up too, which is amazing to me. So somebody's wrong, or somebody's not reading this right yet.
Yeah, or they think that the Fed's behind. I mean, who knows what if Powell comes out as very hawkish. It is going to be really interesting to see the messaging from the White House. One would have to imagine we're going to hear from President Trump on this. There has been a sort of argument as people, especially those who are bullish stocks, and that listen, they don't care what anybody says. If the Trump administration wants something to happen, they're going to make it happen one way or the other. And so you cut through all the noise and just follow that trend. Does it look like bonds are doing that, Jim?
Well, this is a good example of why I think the bond market's smarter. I mean, just look at the last 30-minute candle here. We have a pretty big, massive green candle on the last 30 minutes in the bond market. We're, again, back up to that Jax 1 level. We have a little bit of a wick on top. If you look at the corresponding candle on the S&P, I mean, we have a huge wick on the top. We have a huge wick on the bottom. This is pure speculation. It doesn't know where it's going yet. I have a circle there that's going to be my line in the sand once Powell gets moving. But the bond market's steady Freddy. It's not doing the same gymnastics that we're seeing with the E-mini S&P. So I don't know if that's any kind of evidence to back my theory that it's smarter than everybody else, but it's looking pretty strong to me still.
Yeah, or that the machines are doing a lot of the other. I think somebody put that in the chat. And T-Mao is saying quite the whipsaw, which, for going on the little bit we have, it certainly is. Craig, what are you going to be sort of most interested in hearing in this press conference from Powell? Like this is, as we said, this is really going to be trying to pick up the tea leaves on the outskirts of it, and a lot of it might depend on how pointed the reporters' questions can be. But what are you going to be kind of most keying off of here?
Yeah. So I put up this 4-quadrant framework on my Twitter earlier today. And it's basically, is the Fed loose or tight? Does the economy need accommodation or doesn't need accommodation? And I felt like going into the meeting, market was pricing in for a Fed that was incredibly loose into an economy that didn't need accommodation. That is like your Goldilocks zone, right? It's a Fed that's adding liquidity to an economy that really doesn't need it. And so where I think we've moved to, based on this dot plot, is a Fed that maybe isn't adding as much accommodation as the market perceived. And so we're kind of shifting over, but we really don't know yet whether or not the economy needs the accommodation or doesn't need the accommodation. And we're not going to really necessarily learn that from Powell. We'll learn that in the days and weeks with respect to the pace with which the economy either slows or stabilizes. But it will be interesting to hear from him how concerned he is and they have become about the pace of economic momentum. And so if we start to get wind that the Fed is becoming a little bit more concerned about growth, but is really being restricted from easing because of inflation, then I think we move into a potentially, problematic camp, which is a Fed that is too tight for an economy that needs accommodation. If we move into that camp, that's a risk-off camp for sure. So I don't know that we're going to get there by the end of the day today, but I think we're going to start to hear about whether or not the Fed, believes we could move in that direction. And we'll get more data in the coming days and weeks about the pace of the economic momentum. We'll also get some earnings after the bell with FedEx and other companies, whether, steel companies reporting in the next couple of days. So you get some economic indicators about strength of earnings that could help give investors, a guide to whether or not, third quarter economic momentum has held up, or are we really starting to see, the negative effect of tariffs and the slowdown, and really back to school has meant, this slowdown has continued.
Yeah, this is where, we sit at the cross section of many things. And Tracy, we haven't even hit on the fact that we've got President Trump in front of a ton of microphones on a state visit in the UK, still making news with trade deals. We've got this Friday deadline where we thought we were going to get all this news on China, and a lot of headlines flying around on NVIDIA today, China banning certain chips there. And there's a lot of tariff news that the market's still going to have to contend with.
Yeah, absolutely. I mean, we're definitely not out of the woods yet. I know that again, everything's priced to perfection. It's Goldilocks. We made it out safe. Everything's going to be fine with the tariff tantrum that we had earlier this year. But, we are seeing a little bit of weakening in the labor market. We are seeing credit card delinquencies go up. We are seeing credit card debt go up as a whole. And so those are just some of the things you need to keep an eye on. I don't think they're at levels right now that it's marking a marked slowdown in the economy. But these are some of the data points you need to be paying attention to.
Yeah. Jim, what do we need to, you mentioned that OPEX is coming up. What do we need to understand about the timeline there? And is that going to, affect people's positioning as we maybe leave the Fed with more questions than we have answers?
Yeah. I mean, this has been one of those, September's always like this. We have rollover happening in the futures, right? So we're rolling over to the December contract for the equity markets. We had VIX-piration this morning, and I'm in Deli's camp. I never really followed that before, but it's a thing. We have quadruple riching on Friday, and then almost like a reset on Monday. So it's really kind of between now and the end of the week. You're going to get some sloppy chart patterns. And as an example, I mean, look at this gold wick right now. I was looking at gold and I was like, wait a second, why is there a line on my chart? That's the wick. So it was a crazy amount of just random variability happening right now. And look at the body of the candle. The body of the candle's small. It's cool. It's calm collected. It's right in the middle here of the value area. It's not reacting at all. So you're going to see some of that kind of behavior, I think, in many of the markets, especially some of them that have a little bit less volume in them between now and Friday. And then I think on Monday we'll see a little bit of a reset. Maggie. But one of the questions I did want to ask you guys also is Atlanta GDP came out today also pretty strong. Is that number meaningful or not? It was in the threes. I think it was 3.3 or something like that.
Yeah, look, I mean, this is, I think, continues to be evidence that maybe this economy doesn't need the aggressive pace of accommodation that the market wants. So look, I think we're in that that zone where it's still a good economy. The Fed is easing, maybe not as much as the market wants. And so if we wind up having that strength in the economy and that continues into the fourth quarter, aided by the AI CapEx build out, PMIs reaccelerating, some rotations, into housing and autos kind of doing better and looking better as rates are starting to come down, then yeah, I think that's an economy and that's a market that I think investors will like. If it's really just about front loading and tariff pre-buying and we're about to fall off a cliff, which some of the labor market data would suggest is possible, and some of the real retail sales data we got earlier this week would suggest that we're on a little bit of a slowdown path, then the Fed's cutting will be right on time. It'll be necessary to be commencing a more aggressive easing cycle. So I don't think the 3.5% per se is that noteworthy, but it's that strength or weakness of the economy from here which will really matter.
Yeah, I think that's a great point. By the way, this is going to, we have the press conference. We're going to have reporters' questions, but it's going to be interesting to see the way this is sort of distributed and spun out through headlines. And there's one crossing right now that Mirren calls for a half-point cut in the only dissent as the rest of the Fed bands together. I'm sure that will make heads explode at the White House. But this idea that, maybe this has something a little bit to do with the Fed regaining some control and defending their credibility a little bit with the market is interesting. And again, I think sets up some battles for the future. Tracy, any chance Jerome Powell takes the bait and goes political at all in this presser? I would say no, but what are your thoughts?
No, absolutely not. He's never taken the bait. He doesn't, he has remained neutral the entire time. He doesn't engage in, even if you watch the Senate hearings, right, and the House hearings, he never takes that bait. And so I think he'll just be Powell, right, and try to steer away from that. But going back to the fact that nobody dissented, except for Moran, really says, because people have been talking about, the Trump camp and the Powell camp within the Fed, right, and they've been talking about that a lot. And so it seems that, with the exception of Moran, everybody's moved back to the Powell camp, right, since there were no dissenters except for him. So I think that's very interesting to note, because everybody was talking about when we had Waller and Bowman dissent, that they were kind of moving over to the what they call the Trump camp. So seems the gang's back together with Jerome Powell, besides Moran, which is literally still a cabinet member. So
yeah, it's a very interesting dynamic.
No, I was going to say that Moran put his dot for this year down at between 275 and 300 basis points. So he was, himself looking for basically 150 cuts. I guess that's 50 a meeting. That was where he put his dot out. But it is interesting. So the rest of the Fed, the kind of non-Moran Fed, is basically, looking for. It's tied effectively. It's 9 members are looking for 1 or no cuts for the rest of the year, and the other 9 are looking for 2. So we're kind of we're right on the knife's edge here, right? I mean, it's if we got better data, let's say, and the labor market, isn't deteriorating as rapidly, or inflation next month shows some reacceleration, it's not a done deal that we're going to get a cut in October. And so that may be the message that we hear from Powell, which is that, look, next meeting in October is live, right? It's not we're not on a predetermined course that we're cutting in October and then we're cutting again in December. There's 9 Fed members who likely are saying we don't want to be cutting next meeting. So if we get some talk from Powell that he's, that this is still an open item, maybe that's something in the press conference that could be market moving. Aside from that, I think it's day traders are going to take over, and the zero data expiry crowd is going to take over, and then it's OPEX on Friday, and we could be anywhere. But again, I think we have a Fed that probably in some didn't deliver as dovish a message as the market was pricing. Whether or not equities really care about that in the end, I think time will tell. But I suspect as we push through the week and into the back half of September, which historically shows liquidity being more constrained, I think equities are going to probably start to suffer in that environment.
Well, a Fed that's in play is going to keep us all on our toes, but it also means for some good opportunity because markets will be moving. And speaking of those day traders, this is going to wrap our Fed show, our special Fed show. Hope you enjoyed a little bit of the conversation of how the macro can impact things as days move forward. Jerome Powell is going to be starting his press conference soon, so we will, of course, keep an eye on that. But Jim, I'm going to hand it over to you for trade the close.
Thank you, Maggie. Wow. How awesome is Craig Shapiro and Maggie Lake? It does not get any better than that. Great information, great panel. Appreciate being a part of it. But right now it is time to trade the close, Nick for a tick, XYZ. We're going to have some movement and excitement from these guys. Let's do it. Hey, gentlemen.
To quote Jerome Powell, good afternoon.
Oh, wait, I thought I was listening to Jerome. I'm listening to Nick. Nick's even better. I'd rather listen to Nick anyway.
I mean, I don't know if I can match that aura that man creates every single time he steps in front of a microphone, but I'm going to do my best. How is everyone handling, or I guess, a happy FOMC day to those who celebrate?
Yeah,
it's
so
either
far,
a
so
really
good.
happy day or a really miserable day, right?
Oh, he's on the mic. So here we go.
We've had some wild wicks all over the place already. And it's funny because this happens all the time and people are surprised. We get these huge wild wicks on just about every asset class you could think of in the first 30-minute candle. And then but price settles right in the middle, right before Powell gets on stage. It's almost like clockwork. Right now, I mean, the SPOOs are back to almost the point of control and well within the initial balance. Same with the bonds are a little bit south of the initial balance, but still they're very much unchanged. So gold, same thing. Big crazy wicks up and down, unchanged. So this is one reason why be careful. Don't put a position on right at 2:00.
Absolutely. I mean, I haven't really traded much today. Yesterday was a little more fun. Today, I mean, there obviously has been great since the statement release, but it was pretty slow and terrible for a little while there this morning. XY, did you trade at all?
No, I have not done anything today. So, I mean, my charts have been on and kind of like just popping in and out, but not looking to trade. So right now is pretty much a first real look at the market. So we'll see what happens.
I mean, yeah, I kind of was just watching I opened a swing position at the beginning of the week, and that's pretty much all I've been watching today, not pressing buttons.
Yeah.
It's a little scary, but at least it's moving.
Yep.
Not something.
Well, I felt bad for you guys for the last couple days, right? Monday, Tuesday, this morning.
Oh yeah.
You know, I almost felt like Leo was just trying to make something happen.
Wait, was this morning super slow? I wasn't even
Yeah,
at my desk.
Yeah, I mean, I literally had an all-day runner yesterday that I could have closed in the first 30 minutes and made the same amount. Like I was holding it for more, I guess, and it just nothing was happening. Nothing good happens, I guess, if you're holding a runner all day and it doesn't actually go up or down.
Unbelievable. So let me ask you this. Let me ask you this. So are you going to totally hands off until kind of the dust settles after Powell's gotten through at least the majority of his Q&As, or if you see something right now, you're taking it?
I mean, we'll see what happens.
Yeah,
You
the
never-
thing about FOMC is we can sit here and tell you all these things, and as soon as you get off air right now, it's all in the dust, and we're just like firing something. For me, what I usually do is I wait for more like liquidity to come back on the book. If it's super thin, I'll be hands off still. But as soon as I see more liquidity come back to the book, then I'll kind of like assume that, all right, the dust is more or less settled or settling and can probably get into something. Decisions have been made. Yeah, so I'm just gonna wait for that.
And do you kind of lean into the dome for that, or what do
Yeah,
you?
yeah. So you can see like how much liquidity is, above and below price. And if it's really thin, it's kind of like, okay, everyone's still on the fence, the price can really whipsaw. Everyone's still waiting on something. And eventually you can start seeing liquidity pile up back in, look more normal, and that's when it's easier to do the business for sure.
Got it. All right, all right. Well, I'm going to turn the TV on and listen to you guys at the same time because I gotta hear the Q&As. The Q&As are the best. I mean, he does his speech. All right, it's kind of boring, but the Q&As is really,
Yep.
because you have one or two reporters that will ask the question. They'll ask the question that they shouldn't be asking, and he'll have to answer it. It'll be great. So hopefully they don't call him too late, Powell, though, to his face.
And then Tracy will tell us.
I am waiting for the rage tweeting to start.
Yeah. Yeah, absolutely. In any event, everybody, thank you for being here in the chat. Thank you for listening, viewing. Thumbs up. We greatly appreciate. We appreciate the subscriptions. Remember, at 150K, there's going to be like gifts flying out the door left and right. So we got to get to that 150,000 subscription. Appreciate our viewers for doing that and being part of the show. You guys are the top tier listeners, traders, chatters. I don't know if you call them chatters or not. Folks that are raising up that water, lifting those boats up. We appreciate that. Spread the word on social media. Tell your friends, family, countrymen, people you run into at the grocery store. We greatly appreciate it. And we greatly appreciate XYZ, Nick for a tick, being here with us, putting it on the line for our special FOMC Trading the Close. You guys, best of luck today. I'm going to be sitting back and listening.
I kind of was waiting XY to see if ES was going to rebid back towards the week open. They might have just left me behind.
Yes, has been the one dragging price down all day until 11 o'clock FOMC.
If I do anything, I'm probably going to wait till he's done with his statement at the very least.
Yeah, you know the only I never really trade post FOMC, but ever since the stream, it's the only time I trade FOMC.
If it
Because we're
was
on
not
stream.
for this stream, I mean, my feet would be up. I'd have a snack. Like
Yeah.
I'd just be watching the presser and joking around with you guys behind the scene.
Yeah, so putting it on the line for you guys. Which way we going?
Up or down?
The
Yes.
left. Yeah, who knows? When someone finds out, let me know in the chat.
I do have Daddy Pal in my ear listening, but
Oh, you can hear it right now?
yeah, I've got him on in the background. Not in the background,
In your ear, quite literally.
on the other computer in my headphones.
I've got some jazz house playing.
All right, Q&A's up.
Still a really
Or those week
thin
opens are
book.
holding on ES and NQ. Granted, I don't know how much weight to put into them this week with rollover.
Shraven, if you didn't know, I'm a DJ now.
Oh boy. Chat, how gosh, how has everyone traded today? Has anyone traded today?
Yeah, the morning looks pretty not fun.
I tried to catch the 5-minute opening range mid fade, but it just kind of took it and left, and I was waiting I just was too slow, I guess. Really got like one quick opportunity, and then I was too lazy to want to just join along with that slow trend.
Book is still just whipsawing. There's quite a spread.
Yeah.
So bear with us, guys.
Yeah, Frinton, that's usually the way to do FOMC day. Come back, come back tomorrow. Watch the fireworks though with a spicy beverage or a nice snack, and then come back for the next trading day.
Brian,
Oof,
I
we're
think
moving.
closer to what we usually see. I have my tick compression at 2, so even small double digits in the teens would be okay. Yeah, just not single digits though, because it's too thin. It's way too thin.
And we're off again.
Yeah, Rack City. I mean, hopefully we can find some opportunities, but this is not what it looks like for sure. Not for me, at least. Your green streak is alive and well. Day's not over yet. Who knows? Mine could end today. What a fitting outcome it would be
I just
for
fat
it to
fingered
end
my
today.
lights. Kind of watching ES back down towards the 6640 spot.
Oh, ES is poking new lows.
I think he was just too I just hate when the book's like this. Like I can't find an entry unless I'm gonna
Yeah,
move to
there's
micros and try to scale in 20-point range.
the volume is definitely transacting lower now for a while, but getting access right now is quite
Yeah,
difficult.
this is an interesting reaction. Every bit has just been slammed so far basically since the release of the rate decision.
Yeah, what I hate about this is, although in a vacuum, I'm looking at the volume, it's transacting lower, the interest is lower. Not only is access difficult, but the book is still so thin that one word can flip the entire book. So it's hard to really get along with this thing right now.
And after the last 2 days of this market just kind of slowly selling down leading into this, do I really want to fade it right now? I don't know.
XYZ, when can we get your playbook on paying the tape? I'm working on it right now. It's not going to be releasing incrementally. I'm releasing everything at once. So I want to finish everything up before releasing it. So it's in progress.
And mine,
I
you'll get
want
the
to give a
first.
decent framework, a decent skeleton, and then, from there I'll just keep releasing, different content stuff.
Same. It's not gonna mine's not gonna be all at once. Mine's gonna give you an outline this week, and then we'll start breaking it down in sections.
Yeah, you and Stowe are doing like the
Well, it's just
overtime releases.
I've got a lot. There's a lot of things I mean, my stuff is not complicated, but it's like I don't want to just write like a couple bullet points for each thing because it's a simple concept. Like we'll talk about situations. I want a screenshot of, an example, like we'll talk
Yeah.
through scenarios.
Powell calling this risk management cut.
Interesting.
Volume profile, how many setups do you have? I don't know how many setups I have, but I do know this. They all have very similar components. So it's kind of like I'm doing the same thing every time. So I'm trying to organize it in a way that emphasizes how fractal my trading is from high time frame to low. I'm looking at the same components. So the setups may vary, but they all have largely the same components. So will the playbook address hat choices? No, that's behind a paywall.
Nope.
We're gonna lock that behind a paywall. Not everything can be free. Fractal is good, it says fractal. No bias.
Yeah.
It looks like the
Belly
book got
is a
even
very
thinner.
interesting choice of words. I don't know if the market likes that.
Market doesn't like it because they're just still building volume down here. But this book is thin. Stream live on for the first time. Where can I find content? Set up my NinjaTrader like you guys. Um, if you want to set up just like this, you'd have to subscribe to Orderflow Labs. So that's orderflowlabs.com. A lot of the stuff is in there to make it just like this. Yeah. My volume profile is intraday RTH. The delta profile here is leg to leg.
This is just looking ugly now.
Is he saying anything especially bearish
He's,
right now, or is the market
no, he's
just
talking about the labor market a lot. But you know me. I'm I'm not the biggest macro guy, so I don't really understand a lot of these things.
waiting for him to tell you to buy or sell?
Yes, I did laugh when I was joking to have Leo give me his thoughts yesterday when you guys were on. That was great. Every once in a while, making Leo try to go full macro is great. Oof.
Alfonso, what are you talking about? What's 17? What has to be 17?
Nice little bounce.
Yeah. Yeah, I found a bid. There was someone starting to chase the bid up down there, but see how far they can even take this.
I was watching the ES order book. I wasn't even paying attention to NQ at the time.
I'm gonna turn short here. Just 2 lots short. I'm gonna put this to break even now.
Oh, you took the reoffer?
I took the reoffer. Yeah, they found some volume up there. Got a little stuck. I figure if they're gonna reoffer, it's gotta be from there.
Yeah.
Got pretty close to a TP just now, but I'm not taking it off just yet. Yeah,
You're
it took
holding
me
for
out break
zero.
even. I will consider re-engaging to see what they do up there first. Ah, yeah. It was a good entry. They took me out of my entry. Would have had the first TP right there. Yeah, book's really thin. I don't want to give too much room for risk.
Yeah, I was gonna say it's thin. It seems like it's slowing down, but
Hmm. They're holding volume higher now, so that's
I mean,
interesting.
ES
Don't want
is
to get
just
in the way.
whipsawing like 2 points at a time, so it's still pretty thin.
Still leaning on the sell side, personally.
Yeah.
Let's see if we can.
If buyers can't V us out of this, I think that's pretty telling, potentially.
It is tricky. Yeah, damn.
It's
I
going
should have
down.
gave a bit more room on that last short. It's all right.
Did he just say inflation is transitory? Was transitory?
No, throwback.
I thought I just heard him say
Did
transitory.
he say that? That's a throwback.
Or it could be just hearing like phantom versions of that word because it was such a
PTSD?
talking point for all of 2022 and 2021.
Damn.
Yeah, you had a good short there.
Had a good short. Yeah. I should have gave it a bit more room. I think I had like almost 30
Those.
points before it came back to.
Probably going to head down to 15s to 10s on ES. Last week's highs. Oh, once again, we rolled. So at what point
Yeah,
is some of this valid?
everything's a little weird after the roll.
Some of this lower MGI from the previous week. I don't know how much weight to put into some of these MGI levels, to be honest. Since we weren't trading, most of us were not trading on this contract last week.
Oh man, salty about that short. When's he usually step off?
I mean, he'll probably at least take questions for another 20 or so minutes. It's like someone else trying to step in here at 250s. I don't know if I want to knife catch this though.
Yeah, someone's definitely here on NQ too, but I do not want to try to find a bottom right now for sure.
Rather be late on a potential rotation back up than
Yep.
trying to be the first idiot to initiate it. The
first one's always the idiot.
2 to 3 lots I would sling on ES right now with this illiquidity.
That's the trick. The first one is always the idiot.
No, this is going lower. Check on my
I'd be
swing
100
short.
points in on that short right now. Ooh, someone's pulling up their charts again.
Dang. But that 270 buyer on ES at 11's come in. Oh, they keep adding
imbalances to retrace on that move on
Yep.
NQ.
Dang.
I just don't want to. I do not
Yeah.
want to be an early long, no matter what. I'm still thinking I'd rather just try to find a reoffer. What are the chances we pull back in? .300 range so far. 6606 ES.
Casual 80 points already on NQ back up. Nice trade, Ben. Yeah, I was watching. I was kind of looking like the 10s, maybe a touch lower.
All right. Got 2 lots on. Not stopping.
Nope, going back to the week open.
We'll go for this one. Just sitting in this trade.
Seeing what's going to happen.
Yeah, super responsive bid right now. Super close. Super close. Yeah, no, I can't survive that. Tried to offer it when it stops offering. Let's see what ATR. ATR, yeah, 38. That's more, the ATR at 38 is more than our whole range for afternoons usually. The green streak, it's in danger right now. Not too bad. Day's not over yet. But we are in danger, guys.
Hmm.
Back into value. We're still ramming this thing through. They're driving through a lot of offer. It's actually
Yeah,
kind of
they are.
crazy.
Back to 420.
420 PLC and everything. Yeah, I don't think I can try to fade this anymore. Then I can't even long it anymore either.
Yeah, we're just like rotating back into the range now.
Yeah. First fade was good. Next three, no good. Composite, we might have different settings. Well, I'm pretty sure we do have different settings. What's up, Chris? Man, it's quite a tail down there. Vincent, I don't use Motive Wave. I don't use Motive Wave, so you'd probably just have to try to like mess with the colors. It's a lot of business here, 2A. They just went through so much selling. You just been flat the whole time?
Yeah, I'm kind of watching. I'm debating on jumping in a reoffer here. I should probably just stay flat. Let's be serious.
They are buying it like crazy. Oh, bad fill. take one off here, prior day low.
All right, stopped out. I'm probably done.
You try to offer it?
Yeah.
Yeah, this buying is insane. I'd be happy if I can get at least one off here. Try to run too. Friday low into the IB high. Running into a lot of MGI up here. But this buying is actually crazy, so I'm with it. Green streak ain't dead yet, chat. Down to 2. Is he still talking? Answering questions?
Yeah, he's still talking.
I'm down to 1 here. I'm gonna trail this thing. Green streak is alive, guys. Depending on how this runner goes. There goes that man. Yeah, we'll see, guys. We will see. This buying is for real for now, but I think they're due for a pullback. Since I'm down to 1, I don't want to take it off, but I will add more. I'm gonna add on another one. We are green.
Boom.
Doubters in the dirt.
Huh. 5-minute opening range mid on yes. Did just reoffer. And NQ.
Do I ever trade gold? I used to. Back when it was super slow, maybe like 2023, there was a time where, oh man, the market was so slow. I had gold, oil, the euro, the yen, and nat gas. I would just be looking through them throughout the day. It was that crazy. But since then, I haven't had to do anything like that. So looks like they're gonna take out my last one here. Mike, Delta Towers. I think you might mean Delta Profile. Uh, they are default. 30 to, well, today 50-point rotation. With a 12 tick compression. So yesterday they were 30-point with an 8 tick compression. So it varies depending on range of the day and all that stuff, but yeah. I think we're making our way down, man.
Gonna go back to 6640s. Yes.
Perhaps.
420s. Maybe.
Perhaps.
Yeah, struggling at the point of control.
Yeah, they had 2 attempts up there where all the MGI is. It's a struggle. Tape is like kind of slowly turning towards the sell side. Volume is inching lower, so I'm going with it. Let's see. Yeah. They're kind of flooding the supply now. So let's run it then. Taking one off. It's good to be green, guys. Rumors of the demise were overstated. Absolutely. Absolutely. Gonna break even this and go for POC. And we're happy. We're good. Yeah, it's just risk management gets you far, guys.
This is, I got stuffed out. Let's see. Had a very modest day today. And I think I'm not going to take more trades.
This is the first time ever I've actually just rolled into a trading session post FOMC. Usually I'd have traded like before and stuff on FOMC days. But this is the first time just getting to market. And now by the time I'm executing, things are just flying around. So it's definitely something new for me.
I guess this trade has paid twice today. The opening
Yeah,
range
the
mid.
second attempt was what got me to flip short afterwards, because if it was just one attempt, it's probably like a pullback. But when they tried it the second time, there was no build.
It's paid like 3 times today.
Oh, you mean like that spot? Oh,
Yeah, the 520 short off the opening range mid. You got the one off the open, got the one post data release, and then right here. Interesting. I just noticed that.
What's that volume bar on the side? If you're talking about the profile, like the volume profile, it's just volume profile. And this one is a delta profile. Oh, I'm glad I covered my short there now.
Right.
Potential bounce spot. ES trying outside of value and them saying, I don't think so.
420s on NQ, too strong. We just trade around 420s as much as
honestly, you either hate them or you love them, but you gotta respect them. I'm long. No, I'm gonna try this.
You're an absolute madman, sir. Giving the people what they want.
Yeah, can we get some likes?
Yeah. If you're not hitting thumbs up, this is probably the only man really trading FOMC that isn't an institutional player with real money, truly putting it at risk. I took the $400 stop out, and I'm not giving back any more today, but it's been a good modest day. So let's give it up for XY. Probably the only person on YouTube that's
trying to
actually
make it
trading
happen,
this
guys.
with real money.
Trying to make it happen. See if I can get a TP1 out of this. Right under prior day low. Nothing too crazy. All right. We'll cut that there.
Brinton, if we had the competition today, I guarantee one of us would have blown up in the last 30 minutes.
In the first.
Yes.
All right. Well, I think I'll run with this runner, see if they could just push this thing through. It's at break even now. This will be my extra points on the day. Willing to let it come back now that we're nicely green again.
And all the way back. Us closing unchanged for the day would just be like the chef's kiss to everybody with directional bets on 0 DTEs and other things today. That makes the most sense, to be honest. Let's just close unchanged. We still got 45 minutes. Powell is still talking.
I hope you guys are pumping the likes because I put the whole streak at risk today.
And we're going to pump the next Thursday. What day is today? Today is Wednesday because it's FOMC day. I should have known that already. But next Thursday, if you did not know, the four of us, me, XY, Stowe, and Leo, are doing a all-day four-way stream, and we're doing an arena battle throughout said trading session. So if you have not signed up, the link is in the chat, and we are giving $5,000 in cash prizes to the top 20 traders. There's no cost associated to entering. Just have some fun with us. Tune into the stream. We are going to be trading all day on Thursday, September 25th. So this is going to be the place to be. And if you want to do me the favor, I'm going to start doing this shortly after the close today, but start calling out your favorite influencers on X. That it's time to beat the real traders here on NT Live.
Yeah, come show us why you're better than us.
Just when you thought you could hide behind large size and big P&L screenshots, we're gonna slam a 5 micro competition for just the S&P down your throats. So you want to show us you can really trade and it's all about points and not money? Here you go. Show me how many points you can capture in the full session. You know they're gonna give us like the worst like 0 Arval D-shaped profile type
Dude,
thing on
don't
Thursday.
say that.
I'm like having legitimate nightmares about the possible price action for next Thursday.
Don't curse us like
And
that.
what are we going to talk about?
Yeah, guys, go sign up.
Phoenix. Yes, this is a different competition. I know the site is confusing because there's one going on now if you're registering, but there is another. It's called the 4-way arena battle. Like it's the next arena challenge if you go to the registration page. The same,
Yeah,
for instance, you're right. We're just going to talk about the same garbage that we talk about during Power Hour as it is, which is ducks, cooking meats, random other things in between 20-point NQ ranges.
4 of us on at the same time. What could go wrong, man?
All day too.
They're dragging me out of bed real early for this. So please sign up or it will be in vain.
I keep like zoning out listening to Jerome and I'm about ready just to shut this off because
I'm trying the long.
I don't know what he's talking about. What's the F-bomb quota? Hopefully 0 because this is a family show.
I mean, I might fire off a few.
If I blow the account, there will be an F-bomb. There's no question.
All right. TP1. Let's try for it. Taking that there. Let's try to trail this again. Let's get greedy.
But while we're 900 lot just came into the offer. That's 65s on ES. It might have been 1,000 and he just got partially filled there.
It's possible, yeah.
Because there's like 300 that just filled there too, so it probably was a big order.
I'm gonna scratch out this runner. They're bumping their heads way too many times up here.
We're just
another one off for profit.
Fumbling around the value area for the session, it looks like. We really are. But yes, on the Arena Challenge front, there are almost 700 people currently watching us, or watching me just influence my way through this FOMC presser while XY is trying to carve it up. But I would expect every single person that's here on the daily basis with us in the afternoons, there's zero reason to not be jumping into that competition. Yeah, I highly recommend everybody do it. I want to see more registrations as we get closer, because I'm only going to get more annoying as we get closer and closer. I can promise that.
There's only one way to make it stop, guys. You got to sign up.
Annoying. Yep.
You gotta-
And
sign up.
if
You gotta
you
hit
if
the
you
likes.
think me having family in town this weekend and baptizing my daughter next Sunday is going to keep me from chirping and continuing to announce this competition, you are wrong. And Jerome has finished.
He's
So,
done.
he is done. Daddy pal, until next month.
Book's still pretty thin. Oh, it's coming back a little bit. Oh, there it is. Yep. They're coming back to the book now.
Matt, I'm not going to be cooking anything. My wife gave me a talking to that when we have family over and I am like stressed and managing the grill and things and trying to feed a large group of people. She's like, for once, can you just not do that? She just didn't want me like managing like a brisket and things like the day of a baptism on Sunday and worrying about that instead of looking nice and, all the other things. So I'm doing we're going to cater like a small Mexican place that's close by and just do that.
Oh, so you won't be.
I will
doing
not be
16 at
cooking.
once.
No, I'm literally just getting like catering style fajitas and tacos, and everybody can feed
Man,
themselves.
you can
after the
never go
event.
wrong with that, honestly.
I mean, it's probably the easiest way you can cook. If you're not going to cook yourself, that's probably the easiest way you can feed like 20 people.
Hello, everybody.
Hey,
How
Tracy,
Whoa.
are you guys doing?
you scared me.
Whoa,
Hey,
whoa.
guys. Sorry.
I thought I had like a
Oh.
random like version of
That's
this
our
YouTube
Fed
like
chair.
in the corner or something on.
Sorry, I didn't mean to.
They didn't even
Brigden,
tell us
scare you.
backstage or anything.
I-
This was going to happen.
They didn't.
No.
I'm sorry. All right. So I just wanted to give a brief recap of the presser. Basically, Powell started off a little bit more dovish on the statement, but when it came to the questions, he was more hawkish. He kind of said that this was a risk management cut, not that we necessarily needed it, which is kind of a hawkish statement. He kind of pushed back on ideas of cuts extending into 2026, which is very interesting. Bond bulls did not like that. We saw a major pullback in the bonds when he talked about that. Again, it was all about the labor market weakening. That said, he noted that it was because of immigration rather than tariffs. And then he also admitted that the BLS has a problem in reporting, in that I guess all of the survey data isn't in by the time that they have to announce what the numbers are, and that they have a very low participation rate, and it takes really months to collect the data. 1 month is not enough. And then the other thing was interesting in the labor market, and he said the 911,000 revision that they had, the Fed fully expected, so that was not a surprise to them. And then he stressed pretty much that there was only one dissenter, meaning the ball is back in his court. And so overall, really what this means to the market, I mean, I think it's roll right now, and so I don't think we're going to be able to see in the equity markets exactly how this is going to affect them, because people have to do what they have to do right now, not what they necessarily want to do. But the bond market is certainly saying that this was more hawkish than they were anticipating. And that is all.
Thanks, Tracy.
Tracy's
All
our
right,
Fed
guys.
chairman. She's our Bloomberg terminal.
Yes.
What a luxury.
Yeah, there's a lot of very smart people on this network, and it's not necessarily the two of us. So
You're
it's good that we
definitely
have
not
them
looking
to
at
really
them.
give us the real information as we're fumbling through scalping this post presser currently. But yeah,
Fed
that
chair shy,
terminology was
yeah.
weird. A risk management cut. Yeah, it seems like you and I are more concerned about what color the tie was than
Yeah,
anything.
chat's like, so is it purple then? Or
I would
you're
be more
saying it's
concerned if Pal's tie was not purple than just about anything else he could possibly say or do. If it's not purple, something is very wrong.
it's like it's purple. Oh, thank God.
Please go short here. I have calls on SPX. Like, I mean, depending on when you bought them, you could be very, very happy right now. You may not need me. I don't know how much higher we're gonna go than here, but you bought them near that low, you're probably having a good afternoon.
Two minutes, 1 minute till the turn.
Yeah, it seems like a lot of markets are all over the place.
Yep.
Like gold was up, then down, then back, or excuse me, down, then up, then all the way back down, and now is kind of just settling around 3,700.
We are extending both ways. Oh. Is my screen share still good?
Yeah, you're still
I
up.
think I might have cut out a little bit.
Just let us know where your stop is. Guys, I'm not taking another trade today. It's an FOMC day. I'm green. I lost $400. I gave back whatever, like a
Perhaps
minimal loss.
I
But,
will.
I'm like a very average basic green day for myself. And on an FOMC day, like just being green is good enough. Not trading is probably the better answer.
Put my green streak at risk. And I'm still gonna do it. We'll see. Dependent on a lot of things. We are at prior swing. So things can definitely happen.
You guys are telling me to go short. This is not the worst idea to go short. Like
I'm
right here,
short
right
right
now.
now.
Yeah, that's what I'm saying. Like this is the top edge of the daily range.
See if we can
It's
get
not
back
a
to
terrible spot.
500.
So, all you guys wanting to fade me and continue to go long, joke's on you if we just rotate back to the lows now.
Oh no, they're gonna come kill me.
I mean, it's even ES is still like whipsawing. I have no interest.
Second attempt. I'm gonna add another one here. Going to 3. Watching this closely. I'm not going anything over 3 lots today, guys. So take one off. Tighten up the risk a little bit.
Ooh, somebody coming in on ES.
Taking another one off. I'm gonna break even the last lot. They are stalling. All right, let's see if we can ride this all the way down. Boy, oh boy, the green streak lives on.
I made the joke of maybe we're just going to close unchanged on the session, and we are dangerously close to that area.
I know. Running out of time
After
too.
all this, that sounds about right.
There is so much offer coming in right now that if they don't push this thing down, it's going to be another high.
Yeah, it would be Nick puts on this hat. When you guys were wondering if the hat choice is in the course. It might be in my course. I may have to. Add a hat selection is key to my alpha every day.
Don't give everything for free. I'll put the TP back towards PLC 100 points. Either that or break even. 100 points or break even.
Nothing in between.
Just nothing in between.
Basically, what he's saying is he will blow up this whole deal over $3
No, I think I'm being reasonable. I've got a 2 ticks in front right here. So I'm being reasonable
for your broker's coffee or $3,000.
Screw those base hits. No, I took 2 lots off already.
Yeah, he basically paid for the
on
trade, so he's good.
Now I can sit here and talk tough. You know what I mean?
You're still going. Problem is, ES is just in like the dead center of the value area for today, so don't give us an inch.
All right, if I can get this 100 points on this lot, then I'll call it a session. And please hit the likes. I have risked my green day far more.
This man's over here actually slinging FOMC. Successful.
I'm literally slinging this thing.
So please hit that thumbs up button. While you're at it, subscribe to the channel. It's a pizza party for everybody at Jim's house if we get to 150,000 subscribers. So let's get cracking. We are less than 3,000 subscribers away from hitting 150K.
Wow, Chris is busy.
I apologize for just inviting everybody in the YouTube channel to your house, by the way.
No, when Nick's family comes over, he's going to sit them all down and be like, all right, everyone make a YouTube account. Now go watch this and like it.
Yep. I don't think like my wife doesn't watch my show or the stream. Like no one does. Does anyone's?
No.
Because I feel like even like when Stowe talks about it, it sounds like I'm still always explaining this thing to like my family, my wife, everything. I just feel like we all kind of are. Like they're mine's very supportive, but
supportive, yeah. But
doesn't watch the
they're
stream.
not hitting the likes, not like chat.
Yeah, the chat is my family.
Appreciate you guys. Yeah, Chris has made 5 YouTube accounts, guys. That's inspirational.
That's the way to do it. Sabs.
Hey, Sab, actually, yeah,
that's links just to like the stream. So that's more than you could ask from any spouse.
That's a lot more than zero.
Supporting your streaming career over here. My wife doesn't even do that, so
it's a lot more than zero. And there are probably viewers in here who are just not liking it at all. Don't let it be you guys.
Almost 500 of them.
Nick, the market's going so crazy.
You want me to put the hat on?
All
right, just send it.
It's sending it the wrong way, Nick.
Oh, you're still short. Well, see, in the chat, this is what you guys get. You're now having my hat fade XY's.
Look what you guys have done.
You guys will see a grown man cry on stream.
Look what you guys have done. Not like that. Well, there it is. Unless somehow my runner is still alive. Bring the puppy. I don't know where he is right now.
I'm trying
Probably
to
sleeping somewhere. This dude has a
force
freaking
mine to
bed
come.
in every room, man.
Come here, bud. Come here. Okay. He's like, I'm not supposed to jump on dad.
Dude, he has so many. So yesterday I didn't realize how many toys he had. Oh my God. I think there's at least
Come here, bud.
probably 25 to 30 toys. And he just goes and picks one out and does it. Oh man, they took my runner and just whatever.
It's not working. Trying to give the people what they want, but he just is
Turns
sitting in
out all
front
they
of me.
wanted was my runner.
He's just sitting in front of me demanding pets. Come here, bud. Whiskey. Nope. Okay. I think he's over me. We tried. I tried for you people. Tried for the chat. To show a dog. I usually can get Whiskey to do it. My other one is the laziest, bougiest golden retriever-esque dog you've ever
Up
witnessed.
or down?
I mean, I have the just send it hat on. It looks like we just had a reoffer fail inside of the opening range in NQ. So, oh, we got a dog. We got a puppy.
Oh, it's happening. Let's go.
Hit the likes. Hit the likes.
Yeah, if we can't, we gave you guys a dog. I did my best. My large golden retrievers have no interest apparently in being on camera today.
Bye, guys. Bye, chat. Nope.
Like, do I, you know what? Here, I'll also try to change the vibe. Is this what,
Dog
this
is
what
money.
the people want? Like, do I need to go green?
You needed to go red earlier for my short.
I know. It seemed like it was a fool's errand because we were just continuing to move up.
It's gonna work out without me, and I hate it. Maybe I'll get back in if they can give me another chance up there. But they're driving this thing a little too much right now.
Now they're going to offer this thing, really? Now?
There's still a pretty responsive bid here.
I know. Right at previous day low, too, on ES. Oh, and NQ, I guess. It's like we had all of that fun volatility, and they're like, okay, now back to a 20-point range. Good luck,
Yeah,
guys.
it's like you thought. All right, I'm in for two. I'm in for two. See if we can tag the overnight low.
Through all this volatility, the VIX, in fact, has gone down.
You said it has not?
It did. Well,
Oh,
barely.
it did.
But it's like, it was like over 16 today, and then it died.
Well, thanks. I hate it.
Just when you thought the R-vol might creep up.
Oh, they just ran into a seller right there. Bumped their heads. All right, I'm scratching out of this thing. That was an expensive scratch. That was like a $400 scratch. The hell?
Dang.
That's not even a scratch anymore. Do a market crash? Yeah, I was hoping for it. It looks like they just want to pin us in this range. Yeah, guess what the dog's name is, guys? Dollar Store Robe says, I did not like the stream. How could you do this?
Does anyone know what my dog's names are? Because I've said them on the stream before.
Oh, these names are crazy. Scooter. He does kind of look like a scooter. Whiskey. Huh? Nah, he's too small to have a name like Whiskey. He's a little tiny guy.
Oh, one of mine is Whiskey.
Oh, Viore.
That would be a good name for a dog.
It is unlike all the names you guys have thrown out. It's simply Cooper. His name is Cooper. My wife named him after Sheldon Cooper. If anyone watches Big Bang Theory, she loves that show. So he's Cooper.
Yeah, my dog's Whiskey and Zona.
Coop. Yeah, we call him Coop. Cooper. Whiskey and what?
Zona, as in
Yeah,
Arizona.
see, like Nick's got like manly dogs, like golden retrievers and stuff. See, they get manly names like that. Like those are real dog names. Ours is just Cooper.
It's a good name though. It's a good dog name. We're gonna always do. Always liked our other golden retriever's name was Cowboy. I kind of like the random like Western names for dogs.
It suits you, and it suits the dogs.
Yeah,
Bucket, that's a funny name.
Red golden retrievers. Whiskey kind of worked.
Gucci and Prada.
Oh man, they really are gonna pin us unchanged.
Dude, I
That's
know.
why they're really gonna do it.
Well, as long as the green streak continues, they can do whatever they want. I'm done.
I might not be allowed to trade Thursdays anymore. I went back and looked at my stats. Thursdays, I'm red the last 3 Thursdays, or not the last 3 Thursdays. The last 3 red days, all are Thursdays for me.
Thursdays?
And 2 of them are outlier large loss days.
Should make Thursdays illegal.
I should not be trading on Thursdays, is what I just learned. But don't worry, I'll be back to trade the open tomorrow with Chris.
From FOMC into the old Thursday.
Yep.
What a stretch.
No, I'm going to keep it light and tight probably tomorrow. And then Friday, I promised I was not going to sit at my desk all day with family here. So that's kind of my goal. Trade tomorrow, don't trade Friday.
Yeah, 85 pounds. It's sizable. Yeah, I never wanted a big dog because when your dog is small and he's doing something he's not supposed to, you literally just walk over and just pick him up with one hand and it's over.
I mean, that's kind of why I like the golden retrievers, like the most docile big dog you could ever have.
Yeah, golden retrievers, I mean, they're always so well trained, or at least that's what I think it's from the training.
I mean, they're just people dogs. Like they just like to please and listen.
Damon says, I have a small Shih Tzu you can have. Dude, I never realized how like sometimes I'm like, what kind of dog are you? Like it's like a little baby. You have to do all these things. Like, I don't know. They kind of like one example is, dude, if I don't say goodnight to this guy, he'll just stay up, pop his head up, stare at me, and like start whining. Like, what kind of dog is that?
Well, chat, we got 4 minutes to the Kane algo. Are they going to leave us unchanged on the session? Or are we going to go test lower prices again before we get out of here. What are your thoughts? Because it doesn't look like we're going to go much higher.
That's what I thought. And then they just stayed up here.
Probably just going to close right here because that would be annoying. Yeah, this was like yesterday's low. This is a big option strike on the SPX. Just close it right here. Make everybody upset.
At least they gave us something first. They always do this to us.
I mean, this was a better FOMC to trade. It was not as psychotically sporadic. You and I always seem to do the FOMCs. Just happens to
I know
fall
we
on
always
obviously
it's always us
Wednesdays.
this Wednesday. I guess that makes sense, but
But this one was tradable. There's been others where it's like this is just a mess. Like you can't even find an entry.
I actually don't think I've had a red FOMC day on stream. So I'm very happy about that, especially at the start that I had today for sure. It was dicey. Had me in the first half.
Bears fumbling again. Young Bleezy, this is that's pretty much the norm.
Are you talking about
Day
the
traders.
market or football?
Both. Because sellers tend to do very stupid things, get themselves in trouble, and get absolutely punched in the face. And apparently every seller abandoned ship on that near that low.
Tale as old as time. Well,
I don't even know
hope
what,
you guys
remember
did
what the
okay
leg was
today.
here, but I'm sure there was. Yeah. I don't know. I have to go back and watch it.
Toasty Traits, thanks for being on with us and watching me get punched in the face. Trader Nautilus, the contest hasn't started. It starts on the 25th.
It's a one-day competition, so
I'm guessing a lot of people probably signed up for the wrong one. That's the
I
one
guarantee.
That's
So we'll continue to remind you guys and show you how to do it. Look, there are instructions from our YouTube admins in the background. Register and sign in.
Attention
then scroll
traders.
down.
It's algo time.
Thanks, Kane. right in the middle of the instructions. So we'll watch the algo here in a second. And supports the unchanged theory thus far. Oh, maybe.
I wouldn't be surprised, man.
Maybe. No. Anyway, follow the instructions, register and sign in, then scroll down to browse competitions and join the 4-way battle competition. That's how you know you'll be registered for the correct one. But we'll continue to remind you every day, trading the open and trade the close until next Thursday.
Make sure you guys tune in tomorrow morning so Nick can remind you for 2 whole hours.
Oh, don't you worry. I will. That's when all the streamers are trading the
Trader
open
Nautilus.
as well. So it's
That's
time to
not
go
me.
into all their chats and tell them to also join.
Yeah, go in all the other streams.
If you don't think I'm going to do that tomorrow and Monday, Tuesday, Wednesday of next week, as you start leaving comments, paying for the ones that pop up with all those fancy streamers, like that highlights my comment.
Yeah, Nautilus, that's not me. That's somebody else. I haven't actually traded a contest yet. Did Stowe long the low of day? He probably longed everything.
Stowe
The
might
market
be
keeps going
right
up.
now.
He just keeps making money.
I think Stowe said he was going to possibly take a nap or run errands during FOMC. Couldn't remember what he said. I think he said he was planning on watching his friends from the couch, though. So, Stowe, if
yeah.
you're out there, I hope you're enjoying it, buddy.
Toasty, it's a tough market. If you want to see people not just win but also lose, We do so all the time on this stream, so come back and you'll see.
Yes, I take plenty of losses on stream.
Yeah, we
Like to the tick losses, like things that are just like, it's upsetting when you really think about how many times I've actually done that on this stream.
we take plenty of losses, so you will see us do both and navigate our way through risk instead of, never seeing anyone take a loss. I think that's a huge mark of, I think, the quality of what you're watching, right? You're going to see a lot of content where they're like, look, I got a 3R on this trade, a 15R, I don't know, 200R. It's always that kind of stuff. But, obviously you're not going to highlight your losers on YouTube, right? But I think being able to see how somebody loses is very important. It's very important.
I mean, maybe that's what I'll do. Everyone likes to share P&L, and when I do it, I get trolled. But maybe I should just share the losses, like only share the red trades and red days.
Oh, you should.
Like, here's me losing 200 NQ points today. You're welcome.
Oh, you had a green day? Couldn't be me.
Here you go.
It's like
Here,
5 blown
I
accounts.
lost $4,000 today. Congratulations.
Not my best performance, negative 8K. Where we at on the likes, man? Jim's coming.
We're doing
on.
great.
We're doing good.
355 and counting.
We just got to hit our quota, so Jim will let us see our families.
Yeah, I don't have a lot of, I guess, logic thinking we're going to actually leave this area. They're absorbing it on both sides, on ES.
Does the missus freak out if you're red? She doesn't know if I'm red or green. She has absolutely no idea.
Every once in a while, she can read it on my face. I swear to God.
So every Thursday.
She definitely knew last Thursday.
It's like, oh, tomorrow's Thursday. I hate it.
I mean, every once in a while it happens, man.
She might freak out. We're not at 400 likes yet.
Oh, you just
Jim?
moved it up to.
This was an extended pre-FOMC special today.
Oh, that's true. That's true.
It is true. We inherited all these likes.
We might. Okay, we're getting there. 26 more.
He's like watching it in real time like a chart.
I'm watching.
We need
Who
that
cares
breakout.
where we're closing?
Targeting
We're
400.
closing at 400. That's where
More
I get
burner
down.
accounts.
The vans are
more
outside
burners.
our house to make to board the doors if we don't hit it.
Oh my God, Mrs. Keggs is going to be happy at 400. It is so crazy, though. I mean, we're closing in the middle of the initial balance.
Unchanged. We called it. Let's see.
Yeah, seriously.
That's amazing.
Just a
locked
flat
it.
day. Options expiration week, just burn all that premium.
Yeah, I think we have a few more days of the slap.
Yep.
The thumbs up counter is stuck here. Let me tap on the desk. See if that matters at all. Yep, ticking up. Ticking up, people. You guys did a great job, though, this afternoon, I must admit.
You're pleased with our performance?
I am. Everyone's. We had a great day today. I mean, we had so many contributors, so many folks providing content, live trading. I mean, it was an epic day today. It was really good.
Jim, nobody is happier that you are back than probably XY, because I think last Wednesday I tried to make him, because when you're gone or we have to close out the show ourselves, like I have no problem doing it, but I tried to make XY do it last Wednesday.
Nobody
so
likes
very
it, Jim.
Thankful you're back.
I'm pretty sure. Yeah, yesterday I'm pretty sure I was like, Jim, thank God you're back. You don't know what they've done to me, man.
When I fill out my self-assessment at the end of the year for my NinjaTrader contract, I could say I'm really good at saying goodbye.
Give me what I want or else. You know what happens. Remember those 2 weeks? Yeah.
Yeah, yeah. You guys could play back the videos for proof. 401, you did it.
We did it.
Congratulations.
Wow, we hit it. Nice.
Yeah. I
Well,
mean, not only
we
what,
still
not
have,
only
me and Nick still have the record for views.
Yeah, no one's coming close to the 1,200 likes.
Yeah, honestly, that was our finest performance.
I mean, the Russell I thought was going to go for the title earlier. The Russell just got smacked back down. It was a beatdown.
Isn't that the Russell's thing, though?
I know, but
getting
I got
beat
this
down.
high hope that every interest rate cut, the small caps are going to dig it more than the other caps. But no, doesn't
Just
happen.
perpetually range bound, that index.
Yeah, it sure is. Yeah, so that's where we're at. Everything else is. It's interesting too because the press conference was. You guys didn't watch it because you were doing your thing.
Yeah, I listened. I mean, I was very distracted trying to listen to it, but
Yeah.
Well, our own personal Fed chairman came through and told us
yes,
everything we needed to
Tracy
know.
told us what happened and the important things.
So.
So
Oh yeah, she's
we're
the
very
best.
thankful for her.
Oh, that's the understatement of the century. I wouldn't know half the stuff that's going on without her telling me.
We don't know anything.
Like, could you translate for that? Was that good or bad? What he just said?
So that's up purple tie or
Oh my goodness. So equities didn't really do it. Treasuries are down. Actually, more than I thought they were going to be. Bonds are at a 17 handle now, 117.18. What did gold do today? Gold down today as well. $30. Till I didn't want to give Merritt any credit for that call. Silver's down 2.27%. Big down day. Equities, the dollar came all the way back. The dollar was against the rope at 2 o'clock, and then it just totally came back against the major currency pairs.
now they're driving it lower.
Equal weight futures virtually unchanged.
See you, Ben.
December contract, 1.5 million traded. September only has 477,000. There's the bell.
There's still 477,000 on September.
Yeah, we've been having this weird well, we got 2 more
Feels like
days.
it's just been, it's late. I mean, I know it's Wednesday, but it feels like it was a little later this quarter.
The other thing that's been happening recently is by the Wednesday before the Friday, we have a huge spread. We have a huge gap. I mean, the gap is literally 57 points between the December and the September contract right now.
Hmm.
And the pace of the roll is, they call it the pace of the roll, is usually quicker than this.
Right.
I don't know, but this has been a trend lately, so what do I know? In any event, great day today, guys. Appreciate you guys doing what you do. You are awesome. Everybody, thank you for the thumbs up. Thank you for the subscriptions. Thank you for the participation, most importantly. I love you folks in the chat. Folks that are viewing and can't be in the chat, that's cool too. Thank you for being part of the NinjaTrader community. It's really, in a very few short months, these guys have helped really grow this thing to make it a really meaningful and helpful place to go. Trading's a lonely thing, man. I mean, it's it's you versus the screen, and it's good to have folks that you could hang out with, even if it's virtual. So we really appreciate you guys being here as well. So one last thumbs up for XYZ. Nick for Tick. Thank you, gentlemen. You guys were awesome today.
Thanks, Jim.
Thanks,
Chat,
Jim.
everybody. Have a good
Thanks,
night.
chat.
I'll see you
All
tomorrow
right.
morning, bright and early.
Yeah, tomorrow's gonna be a big day. I do want you to remember most important message of the day. Please be safe out there. Be good to each other. See you soon.